Hello, I'm Hazem Seeker. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, wild swings for global stock markets, why it could be a sign that borrowing costs are going up faster than expected. Also this week, Suffragettes 100 years on. We'll look at how women in 2018 are still fighting for equal rights in the workplace. Plus a surge in US oil production and why that's making life more difficult for OPEC. Now, there'd been an eerie sense of calm where the markets had been concerned all of last year, but this week everything changed and we saw a brutal sell-off in global stocks, which accelerated as the week got underway. On Monday and Tuesday, stocks fell dramatically around the world, erasing all of 2018's gains in a matter of hours. And then they recovered and have been pretty volatile since. So what just happened? Well, the prospect of higher interest rates across the globe was the main reason given by analysts for the market rout. The world economy is just emerging from a period of record low lending rates and in some cases negative interest rates, all designed to kickstart the economy. Nearly a decade of ultra-easy monetary policy has sent asset prices sky high. Now that's likely to end. Things like stocks, bonds, commodities and currencies are going to have to adjust. Well, joining us now from London is David Madden, a market analyst at CMC Markets. Good to have you with us, David. So the general consensus this week has been that the stock prices have been high, maybe too high for months, if not years, and that a big drop was seen as somewhat likely, if not inevitable. Is that how you see it?
That's exactly how I see it. For too long, investors were sleepwalking into the raging bull market that was going on underneath them, and investors and traders forgot that financial markets can fall as well as rise. And there was so much positive momentum, there was so much positive economic indicators, and there's so much enthusiasm surrounding global stock markets, particularly those in the United States, such as the Dow Jones and the S&P 500. Investors, quite frankly, got complacent. They ignored the fact that volatility was at multi-year lows, and they assumed that stock markets would keep reaching fresh record highs or multi-year highs here in Europe or in Asia. And then when we did hit a bit of a speed bump, when we saw average earnings in the United States spike last week, sending fears we could have 4 rate rises from the Federal Reserve this year. That's what prompted this exodus out of equities. I don't think this is. I just think this is a classic example of the market being overbought, overstretched, and the sell-off we've seen recently was a lot of froth being taken off the top of the market.
And why do interest rate rises, or in this case, concerns over future rate rises, why does that automatically mean a drop in stock prices? What effect does that have? The knock-on effect on the economy and on investor worries?
Well, the knock-on effect on the stock market is fairly straightforward. A lot of the money that's in the stock market, particularly in recent months, has been borrowed money. So investors are borrowing at basically all-time low rates, rock-bottom rates, to invest in the stock market, which was until recently having a higher yield, and until very recently equity prices were going up. Also, looking at what's going on in the cash market or the government bonds market, higher interest rates warrant higher yields on cash deposits and also higher yields on government bonds. So investors look at highly valued stocks and think, why would I invest in highly valued stocks which have a reasonable yield, where I can have a similar yield from US government securities or perhaps some cash accounts with quite substantially low risk. So there's a lot of talk about equities being overbought in the first place, and then there's a prospect of higher interest rates. All of a sudden, traders cash in their stocks and plough the money into government bonds and cash.
And just finally, David, are we now entering a new era where the era of easy money is pretty much over, and the low interest rates that fueled that, we're now into a new phase of rising rates and attempts to cool the economy?
I think we're entering the transition period whereby central bankers in the last number of years had a very aggressive loose monetary policies to kickstart the economies around the world. And we're probably in the phase where the central banks are looking to step back and in many cases actually tighten the tighten the monetary policy, be it in the form of higher interest rates or a reduction in the stimulus package. So it's almost like the economy has gotten off the ground, and now the economy is going to have to survive more on its own momentum rather than the guiding hand of central banks.
Good to speak with you. David Madden in London.
Thank you.
Well, February 6th marked 100 years since the first women were given the right to vote in the UK. Activists at the forefront of that campaign were known as suffragettes. Barnaby Phillips has their story.
Glory, glory, hallelujah, the cause goes marching on.
An epic victory celebrated in the Museum of London. 100 years since the first British women got the vote, all thanks to the suffragettes who took on the establishment and won. It wasn't easy. They chained themselves to fences outside Parliament. Many were arrested, beaten, went on hunger strike. One even threw herself at the King's horse in the famous Derby race. She died, but the cause did not.
The suffragettes struggled, but they ultimately won. But what would they make of British society today? 100 years on, would they believe that women have achieved true equality?
It wasn't until 1928 that younger and poorer women were also given the vote. And, says this very in-character actor, the suffragettes always hoped to inspire future generations.
When we win our fight, that's not going to be the end of all the fights. You know, we're going to have to keep fighting, I'm sure. And I just hope that we can set the precedent for that. And that they, keep fighting just as hard as we are.
She, no doubt, would agree. Emmeline Pankhurst, leader of the suffragettes, and great-grandmother of Helen, who wonders if the glass is only half full.
In every single measure of political equality, we still have so far to go. In every single parliament, and in particular in the UK, we only have 32% representation. If we look at all other aspects of democracy, so the legal system, the media reporting of Parliament and of politics, we still have a lot to go.
Live from Soho Theatre in London, the
Comedy throws light on women's struggles today.
This is humiliating, but it also made it a feminist week. It's the first week in our relationship that I out-earned him.
With British institutions, from Parliament to the BBC, hit by revelations of gender discrimination.
It feels like we're just failing over and over, but we have to remember the suffragettes failed for over 50 years. They only succeeded once, and we only need to succeed once. Their impossible is our normal life, and we are the hopes of the suffragettes.
Our debt to the heroines of the past, maligned in their day as misguided radicals, we remember them as being on the right side of history.
Well, a century later, the struggle for equal pay in workplaces across the globe continues. In 2018, the World Economic Forum highlighted that women will have to wait 217 years before they earn as much as men and have equal representation in the workplace. Oxfam says that the economic model is not working. Women consistently earn less than men and usually have lower paid and more insecure forms of work. Just 6.4% of the Fortune 500 list of the biggest US corporations are run by women. The world's two largest economies, China and the US, consistently rank poorly on the UN's annual Global Gender Pay Gap Survey. But there has been some progress. In January, Iceland became the only country in the world to make pay inequality illegal. In April, all UK companies with more than 250 workers will be required to submit data on pay grades and explain any gender gap. Well, joining us now from Lancaster in England is Sylvia Welby, a professor of sociology and UNESCO chair in gender research at Lancaster University there. Thanks very much for being with us. So let me ask you first off then, why does the gender pay gap exist, and what are the factors that influence the pay gap?
The gender pay gap is a consequence of gender inequalities in employment and also in the wider society. Some research that I did looking specifically at the components of that disaggregated that gender pay gap into several parts. Some of it is due to direct discrimination and prejudice against women. Some of it is due to indirect discrimination when women are treated less well for characteristics which aren't just about being women, for example, working part-time. Some issues are to do with wider gender issues in society, such as issues of the domestic division of labour and whether society looks after children or whether it's only the woman's responsibility, and also issues of education, whether women have equal access to education, and indeed much broader issues of the extent to which there is gender balance in decision making and whether women are full participants in the decision making in a particular society. And if women are full participants in that decision making, then you can see the fine-tuning of both employment practices and policy practices which would facilitate women's greater engagement in employment and thereby close the gender pay gap.
In the UK, they're trying a different approach. The government is talking about making companies report their pay and thereby highlighting the disparities between men and women. Do you think that perhaps might be more effective than equal pay legislation in terms of kind of shining an unforgiving light on companies that persist with this gender pay gap?
The effect of it in Britain recently has been intriguing. Many people who did not know that they were being paid less than the man sitting next to them have suddenly realised that there is a significant gender pay gap and have added their voices to this issue. And we've seen some significant changes in company policies as a consequence. So it's been a very interesting development in addition to the other laws.
But despite all of these trends and changes, it is estimated, according to the World Economic Forum, the gender pay gap could take up to 200 years to close. I mean, what do you make of that?
Yes, that's very, very slow, isn't it? Their estimates, I think, are based on slow changes in education, working through the system, and they have a notion of this very long change in the pipeline, and eventually that these gender gaps will close. So on the one hand, it's optimistic in that they think that this will just happen. On the other hand, this is a very slow process.
Another big argument that's been made, though, as well for the closing the gender pay gap is that it does actually boost the economy. Have you seen evidence of that?
Indeed, this is part of some of the principles behind the United Nations Sustainable Development Goals, where Goal 5 treats gender equality as a necessary component of sustainable economic growth. So there is a wider recognition of these issues in international circles, in the OECD and also within the United Nations.
But not every country in the world is signing up to that, though, are they?
It's very uneven, you're absolutely right. Countries differ in the extent to which they adopt these policies. There are enormous differences between countries in the extent to which women are included in the decision-making processes, and this has significant impact on the development of those policies. If you look at the countries with the narrowest gender gaps in decision-making, for example, the Nordic countries, then you see the narrowest gaps in women's participation in economic development. So yes, enormous differences in countries around the world, and the differences show in the outcome for both justice and economic growth.
Sylvia Welby, thanks for being with us.
Thank you very much indeed.
Now, still to come on Counting the Cost, Laos is in debt. Find out why that's ringing alarm bells and which country is lending it money. But first, changes to Middle East aviation this week could help bring costs down for passengers. On Monday, Ryanair said it's launching flights to Jordan for the first time. The low-cost Irish airline already flies to Israel and Morocco. Its first route from Amman in Jordan to Paphos in Cyprus will begin in March. Now, billionaire entrepreneur Elon Musk made headlines too this week. His company, SpaceX, sent one of his Tesla electric cars into space. Rob Reynolds reports.
3, 2, 1.
With its 27 rocket engines roaring, the SpaceX Falcon Heavy soared into the Florida sky. It's the most powerful rocket on Earth, with a thrust equal to 18 747 jumbo jets working simultaneously at full power. The successful launch gives a powerful boost to billionaire entrepreneur Elon Musk's company, which wants lucrative contracts with NASA, the U.S. military, and satellite companies. On board the unmanned ship, Musk's own cherry red Tesla Roadster from his electric car company, with a space-suited dummy in the seat and a stereo playing the late David Bowie's Space Oddity on repeat. The rocket's side boosters separated from the main body and flew back to Earth, touching down in a perfectly choreographed double landing. The boosters will eventually be reused on another mission. Another booster was designed to land aboard a ship at sea. Musk says Falcon Heavy's payload will go into an elliptical orbit of the sun that extends as far out as the orbit of Mars, and will continue circling for hundreds of millions of years.
Some people have criticized the launch as an expensive stunt. It came a day before Musk's Tesla electric car and energy storage company reported its biggest ever quarterly loss. It lost more than $675 million in the last 3 months of 2017. The company's been spending heavily as it rolls out the next generation of electric cars. And social media platform Twitter has reported its first ever quarterly net profit of $91 million. It could be a sign that advertisers are beginning to spread their online spending beyond Facebook and Google. Our production from U.S. oil wells is at all-time highs. U.S. energy officials are predicting output will top 11 million barrels per day by the end of the year. Now, this could not come at a worse time for OPEC, which is trying to cut production in order to wipe out oversupply concerns and support prices. Surging U.S. oil production could upset the supply and demand equation in the whole global oil market. And there are questions, too, over whether its potential is being overstated. Well, joining us now from New York is Antoine Hauff, Senior Research Scholar at the Columbia University Center on Global Energy Policy, as well as a founding partner of Kairos, a data analytics company for the energy markets. Good to have you with us. So let's start off then with that key question about whether demand will keep up with this increase in supply. To what extent is this going to upset the whole supply and demand dynamic in the oil markets?
Demand has been extremely robust. The more we talk about peak demand, and we talk about it a lot, the more demand looks to be rising, the stronger demand looks to be. But probably the strength in demand in the last few years has been really a response to low prices. And you're right, there's a concern that if prices go back up, we would see some demand response. We tend to underestimate short-term demand responses. They're not so insignificant, it seems.
And there have also been some significant technical improvements in the whole shale process and the way they're able to get the oil out and how quickly they're able to do that. Has that been a factor in all of this?
I think there's been lots of improvements. I wouldn't say how quickly. I think that's the opposite. I think a lot of the improvements, the cost efficiency, the cost savings that have been realized in these 4 years, 3 years of low prices have come at the expense of the ability to rapidly deploy rigs and rapidly bring supply out. In fact, if you look at the trend in the last year, remember in 2017, for most of the year, growth in shale disappointed, was less than people expected. And then just recently, in September, October, November, it shot up very, very rapidly.
So is the International Energy Agency right in its estimates then? Are they potentially overstating how far shale could go?
There's always a risk in oil forecasting of extrapolating from the recent trend, from the latest numbers. So I think the IEA is absolutely right to underscore the significance of the shale revolution, how big a deal this is. This really is a game changer in many ways. But I think the latest forecast may be over-optimistic and may be putting too much faith in the most recent increases and extrapolating from them. I think the very steep gains we've seen are not something we're going to see on a monthly basis. We're going to see it from time to time.
So what does this potentially mean then for Saudi Arabia and Russia and this forecast that the US will overtake them in production? What's your take on that?
Yeah, the forecast, it's a good headline that it's going to overtake Saudi Arabia and Russia. It's only overtaking Saudi Arabia because Saudi Arabia is reining in production deliberately because of the quota. That's the ceiling that's currently in place in OPEC production. Saudi Arabia could easily push back ahead of U.S. production. But I think it's right. You now have a market. It doesn't really matter who is on top by a few barrels. You have a market that's now dominated by three major players: Russia, Saudi Arabia, and the U.S. And what happens with these three dominant players, we suddenly have a leading impact on the market.
And it's all quite a far cry from what Saudi Arabia had been trying to do in the past, which was to increase production in the hopes that that shale production in the U.S. would be driven out of business by the lower prices because it wouldn't be economically feasible. That strategy clearly hasn't worked, has it?
If that's a strategy, I'm not convinced that's a strategy. It might have been the case. I think the strategy, whatever it worked, whatever it was, worked because the market has been rebalancing. There's been a very dramatic draw in inventories over the last more than half a year. So we are seeing a rebalancing, whether it's coming from shale or from other sources of supply or from the strength of demand. Perhaps at the end of the day, it doesn't matter so much for the Saudis or for anybody else in the market.
So how big a headache is U.S. shale production for OPEC going forward then?
Well, it's something that nobody fully understands because it's a young industry. So there's still a learning curve. It's still evolving. Things are moving constantly. The technology evolves. The political environment evolves. The market environment evolves. The cast of characters, the investors are changing. We've seen recently some of the private equity that had been making the boom in shale production possible move away from shale. So there's a lot of changes in this industry, and I think it's a challenge for everyone to understand what the trends are, what the prospects are, what the outlook is, and it's not different for the Saudis and for anybody else, but it's not necessarily all bad news or all good news.
All right, Antoine Half, good to speak with you.
Thanks for having me. Appreciate it.
And finally, concerns are growing about how much money the government in Laos is borrowing from China. Wayne Hay reports from the Laotian capital, Vientiane.
The coffee industry in Laos is one of the fastest growing in Asia. Its output is still small compared with regional leaders like Vietnam and Indonesia, but fueled by increasing demand from neighbouring China, production grew by more than 8% last year. Growers say Laos has a real opportunity to take the industry to the next level through improved infrastructure, like better processing facilities.
We must have financing.
But despite it being one of the few Lao export products, there's no sign the government is willing to help.
They think always to develop the country on mega projects, on hydropower, on mining, on big factory. But the small SMEs are not enough supported.
Indeed, the government has big plans to shake off the tag of one of Asia's poorest countries. It wants to graduate from the United Nations least developed country status in the next 12 years. And it's turned to China to help fund big projects like this economic zone just outside the capital Vientiane, which is being built in anticipation of the city expanding quickly. And a $6 billion high-speed train line that'll run from southern China to Vientiane. But the amount of money the Lao government is borrowing for the projects is causing concern. Public debt is estimated at around 68% of GDP, and almost half of the money is being borrowed from one source, China.
Too much reliance on Chinese financial sources certainly would be risky because this country will be exposed to this business cycle of China, credit cycle of China.
The Lao government says big investment is vital if it's to improve the livelihood of its people. One priority is healthcare, which, like many aspects of Lao society, has fallen into disrepair through poor governance and neglect. The main hospital in the capital was built by the French in 1903 and has had few improvements since. But as part of the government's healthcare reforms, work will soon begin on a new hospital to be built on the same site, built with Chinese money.
And that is our show for this week. Get in touch with us by tweeting me at Hazem Seeker and do use the hashtag AJCTC when you do, or you can drop us an email. Counting the Cost at aljazeera.net is our address. There's more for you online as well at aljazeera.com/CTC. That'll take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. That's it for this edition of Counting the Cost. I'm Hazem Seeker from the whole team here. Thanks for joining us. The news on Al Jazeera is next.